Good evening, students. Welcome to the session. So, have you revised the last class, section 45.4? Yes, which was very important section, and section 9b. And we have to continue from there onwards. Yes, have you revised or not? Any questions that you have that you would like to discuss? Good evening, Oja. Yes, any questions that students have that you would like to discuss, or we'll just quickly revise what we have done, and you have to answer me very quickly. In next 5 minutes we'll be revising everything that we have discussed so far. So we started with section, what is the charging section? Yes, students, what is the charging section? Yes, fast.
Section 45.
Correct. Yes, section 45. What does it say? Profit and gains from the transfer of a capital asset shall be charged to income tax in the previous year of, in which previous year it will be charged? Yes, in which previous year we will charge it? Yes, students, please first. Yes.
The previous year in which the transfer taking place.
Yes, in the previous year in which the transfer is taking place. Now, transfer is defined under which section? Transfer is defined under which section? Yes, faster.
Section 2, subsection 47.
Correct. It's an inclusive definition of transfer. Yes, which says what? Transfer includes the sale, exchange, relinquishment, extinguishment of rights, compulsory acquisition, right? Then what else? Redemption of the zero coupon bond, the conversion of the capital asset into stock in trade, and transfer of or any kind of transaction resulting into transfer of possession under section 53A of the Transfer of Property Act, or becoming a member of a cooperative society which enables you to enjoy the immovable property. Yes. So this is what is the definition of transfer. Then capital asset is defined under which section?
Section 2, subsection 14.
Yes. So it includes and excludes certain things. What does it include? It includes the securities held by FPI, even if it is considered as stock in trade, right, students? Then jewelry, paintings, art, work of art, all of that, urban agricultural land, ULIP where the premium is greater than 2.5 lakh. It excludes the stock in trade, but it includes, as I said, the security held by FPI, even if it is stock in trade. It excludes the personal effect. It excludes the rural agricultural land and specific gold bonds, right? But what is capital asset? It's a property of every kind. Then we moved on to the specific section, section 45(1)(a). What was that regard? The destruction of the capital asset and the insurance compensation received on account of destruction of the capital asset by natural or man-made calamity. What would be a full value of consideration in that case? Yes. What will be my full value of consideration? Yes, students, fast. Full value of consideration in that case was the insurance compensation received plus the FMV of the asset if it is received as insurance compensation. The taxability was to be calculated, or it was to be taxable in the previous year in which the compensation was received. In the year in which the compensation was received, in that year, it will be chargeable to tax. My cost of acquisition will be my actual cost. My period of holding will be till the point till the capital asset was there. It will not be in the year in which insurance compensation is received. The period of holding will be counted till the year where we had the capital asset being destroyed, and indexation will also be till that year. Are we clear? So that was for the section 45(1)(a). 45(1)(b) was with respect to ULIP. As I said, ULIP is a specifically now considered as a capital asset where the insurance premium is more than 2.5 lakh, which is because of the fact that now it will not be exempt. The proceeds from those ULIP will not be exempt if the insurance premium is more than 2.5 lakh. So it will be considered as a capital asset. Now, once it's considered as a capital asset, what will be my taxability? How the capital gains will be computed? As I told you, it will be A minus B. A is the amount received and B is the insurance premium paid. And if in the subsequent year, it will be again C minus E, which is the same thing, right? Then 45.2 was conversion of the capital asset into stock in trade. Now, conversion of capital asset into stock in trade, as I said, it's specifically regarded as transfer under 247. It will be taxable in which year? In the year in which the stock in trade is sold. In the year in which the stock in trade is sold, what will be my full value of consideration? FMV as on the date of conversion. And the taxability will be in the year in which the stock in trade is sold. In that year, you will have capital gain and you will have the PGBP. But you will get the period of holding and indexation up till the year in which it was converted into stock in trade. But for the purposes of Section 54 EC, 6 months will be counted from the year the stock in trade is sold or from the date the stock in trade is sold and not from the date the capital asset is converted into stock in trade. We made a comparison between the two, between the conversion of capital asset into stock in trade and stock in trade into the capital asset, right? Then 45.2A was that the capital gain shall be in the hands of the beneficial owner and not in the hands of the registered owner, which is the depository. And the cost of acquisition and the period of holding will be on the FIFO basis. 45.3 was the capital gain on transfer of asset by a partner or member to the partnership firm AOP BOI on admission. So capital gain will be taxable in the year in which the transfer takes place, but the FPC will be the amount recorded in the books of accounts as the value of the capital asset. Are we clear? Any questions up till this point? Yes. Any doubts? Yes. Pooja, you have a question?
Yes, ma'am.
Yeah.
Ma'am, in the section 45, subsection 2, the example you have said regarding land purchase in 2000 and convert into SIT in 2001. And when we calculated the taxability, we charge it in 2007 in which the SIT has been sold, है ना? तो
Yes.
द कैपिटल गेन यानी हमारे पास जब लैंड था वो कैपिटल असेट था, है ना? और
Yes.
उसको एसआईटी में हमने कन्वर्ट किया तो उस दौरान का जो भी यानी वैल्यू रहेगी वो कैपिटल गेन में कंसीडर होगी, तो फिर पीजीबीपी में हम कैसे लेके जाएंगे? यानी मुझे
Understood. See, your question is very valid, Oja. So, see, I'm explaining it in both the languages so that it becomes simple to understand for all of us. So, see, it's nothing as a taxable event, right? ये तो हम एक जगह से मेरे ही घर पे सी आई एम टेकिंग दिस पर्टिकुलर थिंग फ्रॉम वन कबर्ड टू अनदर कबर्ड. It's like
Yes.
that I'm just shifting my compartment. So
Yes.
technically तो कोई गेन है ही नहीं. गेन कब रियलाइज होगा? जब मैं स्टॉक इन ट्रेड सेल कर रही हूँ. So there's a deemed transfer and that's why they are specifically included under 247 as a category of the deemed transfer. That when you convert the capital asset into your stock in trade, there is a deemed transfer. Now to calculate the capital gain on that deemed transfer, they say you consider the FMV as on the date of conversion. जो भी capital asset का FMV है as on the date of conversion, that will be your FVC. And the cost will be your actual cost that you have purchased of that land. That will give you capital gain. अब जब आप PGBP में जाओगे, so ideally PGBP में आप क्या करते? आप अगर let's say अगर ये deemed transfer नहीं रहता, so then I would have done कि sale consideration मेरा stock in trade का 90 है, कॉस्ट ऑफ एक्विजिशन मेरा जो कैपिटल एसेट लैंड का था वो 40 है, तो 90 माइनस 40 इज 50 लाख मैं पीजीबीपी में चार्ज करती हूँ. बट एक्ट क्या बोल रहा है कि आप दो चीजों में बाइफरकेट करो. यही 50 लाख टैक्स करेंगे हम, बट दो जगह पे दो सेपरेट हेड में, बिकॉज till the time it was converted into stock in trade, it was a capital asset, and till that point of time it should be capital gain. After that it should be PGBP. So what it is trying to do is the FMB minus the cost it is considering capital gain, which is 30 lakh, and sale consideration minus your FMB, which you have already taxed under 45(2). That will be considered as cost for PGBP, and your PGBP will then be 20 lakh. So in effect, मैं 50 lakh पे ही tax pay कर रही हूँ. Are we getting that?
Yes, ma'am. Yes, ma'am. Now clear.
Okay. Any other questions, students?
Thank you, ma'am.
Okay. Okay. Good, Mihika. Okay, so now we move to 45(4) and 9B, which is what we started or ended rather in the last class, and we are going to start a year from in this particular class. So a very good recap of this. First, we'll start with 9B. You have to give me the answers. Okay, what was 9B? Don't look at the screen. Just tell me what was 9B. Yes.
Ma'am, 9B is regarding when the entity transfers any capital asset or SIT to the uh, specified persons.
Yeah. So 9B comes on when there is a transfer of capital asset or the stock in trade by the partnership, let's say for example, to the partner. On the, what is the trigger event? On the dissolution or reconstitution. So if that event is triggered, then there will be the taxability in the hands of the partnership firm. There will be taxability in the hands of the partnership firm, and it will be chargeable under the head capital gain. If there is a transfer of capital asset, it will be chargeable under the head PGBP if there is transfer of the SIT. Right? So the trigger event is the transfer of the capital asset or SIT on the reconstitution or the dissolution of the partnership to the partner. And the chargeability will be in the year in which the transfer takes place in the hands of the partnership firm. Right? It will be deemed to have the specified entity will be deemed to have transferred the capital asset or SIT into the specified person. Now, what will be my computation or how will be my computation? Computation will be FVC of that capital asset or stock in trade will be the FMV as on the date of receipt by the specified person. That is section 9. Right? Now, 45(4) is what? Then what is the difference between 9B and 45(4)? 45(4) is trying to tax what? Yes. 45(4) is trying to tax what, students? Yes, Prashant. Transfer of capital asset or stock in trade to specified person on dissolution. That was right. That was for 9B. But what is 45(4) trying to tax?
Transfer of money or capital asset.
Transfer of money or capital asset. Yes, that is right. But in whose hands it is trying to tax? Or whose income is under 45(4)?
Ma'am, it is deemed income under in the hands of specified entity, and the money and capital asset received by the specified person.
Yes, absolutely. Very good. Oja, very good, Prashant. Yes, it is transfer of rights by the partner under 45(4). Very right. So 45(4) में हम क्या टैक्स करने की कोशिश कर रहे हैं? जब partner is resigning, when the partner is resigning from the firm, or the partner is giving away his profit sharing ratio. What is reconstitution, students? Reconstitution is admission of new partner, the resignation of the existing partner, or the change in the profit sharing ratio. Right? That is my reconstitution. Now, during the course of reconstitution, the partner will give up certain rights. Right? The partner will transfer the rights in the favor of another partner. So 45(4) is trying to tax that income. So because the partner is losing his right, the firm is giving him the compensation. Simple terms में, if I have to explain it, I am a partner in the partnership firm. I am resigning. Now, मैं resign कर रही हूँ, तो partnership firm will give me certain compensation, right? Because I've worked so hard for the firm. So the 45(4) is not technically a tax on the income of the partnership firm. It is tax on me. See, capital gain में दो ही लोग होते हैं, एक seller, एक purchaser. ये केस में seller कौन है? 9B में seller कौन है? See, under 9B, seller is this entity, right? This is the purchaser, right? The seller under 9B, the transferor under 9B is the partnership firm who is transferring the asset to the partner. So purchaser is partner. The transferee is partner, isn't it? लेकिन 9B में seller कौन है? Sorry, 45(4) में seller कौन है? 45(4) में seller is, or the transferor is, the partner, and the transferee or the buyer is the partnership. I am giving away my rights, and for that I am receiving the compensation from the firm, right? So this is the income of the partner, but the act says it will be taxable in the hands of the firm. So if you see the language here, it says profits or gains arising from receipt by the partner shall be deemed to be the income of the firm. So don't mistake that this is the income of firm. The income of firm नहीं है 45(4). 9B is income of firm. But 45(4) is deemed to be the income of firm. The onus is shifted from the partner to the partnership. It shall be taxable in the previous year in which the capital asset or money is received by the partner. Are we clear? So here also the trigger is receipt of money or capital asset in connection with the reconstitution. Your dissolution is not covered. Your stock in trade is not covered because capital gain में stock in trade क्यों आएगा? Right? Now the computation will be A is equal to B plus C minus D. What is B? B is the value of money, C is the capital assets, FMV as on the date of receipt, and D is my capital balance. Ignore revaluation and self-generated goodwill. If A is negative, it will be deemed to be 0. Clear till this point? Any question? Yes, Prashant, very good. Seller is the partner or member. Yes, any question till this point, students? Clear, Roja? Yes. Yes, Hemant, clear? Yes, any doubt you have, please stop me there and then. I don't want you to carry forward your doubts, okay? You can ask me multiple times any doubt because these are complex topics, students. And this requires your lot of attention. I'm here to solve all your doubts, okay? Now, can anybody tell me what was 48(3)? हमने last class में किया था. What was 48(3)? What was 48(3), students? There is a deduction under 48(3). What was that? Can anybody explain me that?
मैम अंडर सेक्शन 45(4) में जब हम कैलकुलेशन करते हैं तो अगर हमने किसी भी पार्टनर को मनी प्रोवाइड करी है और हमने वैल्यूएशन किया है हमारे यानी आपने जो एग्जांपल दिया था मैं उस बेसिस पे तो हमने अगर कंपनी ने पार्टनर को वैल्यूएशन के बेसिस पे मनी प्रोवाइड किया है मानो कि वैल्यूएशन अमाउंट इज 200 रुपीज एंड पार्टनर and given to partner is 100 rupees, then we already given the valuation amount today, and the valuation is related to after 1 or 2 years, uh, then we have to pay tax on today.
Okay.
Uh,
Yes, right. So, see, it's not valuation, Oja. It is tax. Of course, your explanation or the understanding is absolutely correct. But you have to also use the correct terms. Okay.
yes,
I'll
ma'am.
explain it once again. So, yes, Prashant, 48.3 was about the actual sale of asset which was subject to tax earlier under 45.4. Absolutely correct. Vignesh, yes, 48 is mode of computation, but 48.3 gives a specific deduction. What is that? सी ये एग्जाम्पल जो हमने कंसिडर किया था, राइट? अब इस एग्जाम्पल में क्या हो रहा था? whenever any partner retires, right? Yes, Hemant, you're right. Whenever any partner retires, तो हम क्या करते हैं? We prepare the partnership accounts, right? If you remember in your CPT also, we used to prepare the partnership accounts as on the date of any admission of the partners, any dissolution or reconstitution of the firm, whenever it used to take place. Do you remember that? Now, why do we do that? The objective is to find out that how much is payable to the outgoing partner, if you remember, right? So we consider the value of the assets as on the date when you have the reconstitution of the firm taking place. Isn't it? So therefore, what do we do is we recalculate the entire profit and loss account. Or we recast the entire financial statements on the admission of a new partner or on the retirement of a new partner to understand what is payable to the outgoing partner. Right? यही करते थे हम पार्टनरशिप अकाउंट्स में, सीपीटी में, रिटायरमेंट ऑफ अ पार्टनर. You used to calculate what is the new ratio now, because the old partner will go away when he retires and the remaining profits will be shared between the new partner, and therefore you will do a revaluation of assets. So on the retirement of a partner, you are required to revalue the assets and liabilities, as also in the case of admission of a partner, so that you get the revaluation profit, which will then be distributed amongst the existing partners, including the retiring partner. हम क्या journal entry pass करते हैं? You will recast the financial statements based on the FMV of all the assets and liabilities. And then you pass the entry revaluation account debit to the partner's account. You are transferring the profit on revaluation to the each partner. Are you getting that? Now, this is what 45.4 is trying to tax. Because what you will do when a partner will retire, you will transfer the profit on revaluation to him. You will transfer any reserves which are there to him. Right? So the capital account which will be there will be credited with all of those items. And then you will pay him the final balance what is appearing in his capital account. So you will discharge the entire capital balance to him. Are we getting that? This is what we were taught in CPT also. Now you will say this is on the retirement of a partner. What happens in the case of the admission or the change in the profit sharing ratio? Same thing. When a new partner is admitted into the partnership, then also assets are revalued or the liabilities are reassessed. Right? Because at that point in time also, there is a change in the profit sharing ratio which is going to happen. So you will have the revaluation happening then also. This revaluation we used to credit to the individual partner's account. with the old profit sharing ratio, because now the ratio is going to change. Now the capital balances of the old partners will change. And then only the new partner is admitted. Are we getting that? So this is what we used to do in the partnership. Now 45(4), as I said, is trying to tax the same thing. It is trying to tax that revaluation which is happening. And see, if I again go very simple on this, so that I want you to explain and understand the basics of it, because then you will not forget what it is exactly. So I'm spending most of my time here. Okay. So see, let's say for example, जब A retire हो रहा है, in this particular case, A is retiring. So what I will do is, now my land is revalued to 200, right? So in the capital account of A, what is happening? Let's say my opening balance is 10. To the revaluation account, I will do, or let's say I will, sorry, not to revaluation account, revaluation account, I will do, let's say his share is 100 in the land, because here my balance sheet is recasted. Now this 20 has become 200, isn't it? So obviously there is a revaluation account which is appearing over here, which is of 200, right? We will pass the entry land to revaluation, which is 200. And this revaluation we will distribute to A and to B, 100, right? Now when A is going, what I will do? I will pay him, let's say, cash account debit to A, and I will try to close his capital balance, A to cash account. Let's say I'm paying him 90, or let's say I'm paying him 100. There is a, let's say, profit sharing ratio also. There is a loss also, so I'm paying him 100. So this 100 is paid to him, and this is what is being tried to tax over here. So if you look at it, here under 45(4), they are trying to tax this 90 rupees which is there, which is 100 minus his opening capital balance of 10. Are we getting this? So this is nothing but the revaluation is getting taxed when the partner is retiring. And when you actually sell now land, let's say in the next year you're going to sell the land. Now, ideally I have already taxed 90 rupees. Even though I have not sold the land, I have not realized that gain in my hand. It is just taxed on the revaluation. When I've done the revaluation, at that point in time, you're taxing me. But I have not realized that amount. So when I will actually sell that land, in that year, I will realize this amount. So at that point of time, I should be giving the deduction of the amount already taxed. So 48(3) will give me the deduction of 90, because this is the amount which is already taxed. There was a preponement of the tax liability. Are we clear about this? So 48(3), is it clear to everyone? Yes. 48(3) is clear. It was a notional gain. Yes, Hemant, at the time of reconstitution. Clear? So let's proceed further then. So this is the only one sum that we had done at this point. Now we'll move to the other questions. So let me reshare that question bank with you. Yes. So question number 2. AB partnership firm has two partners, A and B, having share capital of 10 and 10 equally. The firm has two assets. land of 10 and plant and machinery of 10. A retired and C was admitted as partner. On retirement of A, assets were revalued and cash of rupees 100 was given. The FMV of the assets as on the date of retirement is given this one. So let's consider this now. I'm again following a balance sheet approach. Let's say this is the balance sheet of firm. There were two partners, A and B, whose capital balance was 10 and 10, right? And the firm had two assets, land of 10 and plant and machinery of 10. Now A is retiring. So at that point in time, the FMV is calculated to revalue it. So land is 70 and plant and machinery is 130, right? So now A is given the cash of rupees 100. So what will be my 9B?
9B will not be applicable, ma'am.
Yes, why not it will be applicable?
Because in 9B, the chargeability is on when transfer of capital asset and SIT. And 45 for the transfer is money and the capital asset. That's why here only the cash has been transferred and not SIT is there.
Yes. So 9B not applicable. It's very clear, right? So let's say 9B is not applicable. Now what will be my 45? Yes.
Ma'am, here B will be 100 rupees that money transferred, and C will be 0 as not any capital asset has been transferred, and D will be 10 rupees, the capital balance of A.
Yes. So this will be 90, right?
Yes.
Now in this case, what will be my 48? Let's say in future, I sell the land for rupees 200. Let's say let's say land is sold in previous year 25-26 for 200. So in this particular case, let's say my FVC will be 200 minus the cost of acquisition, let's say 10. So now what will be my 48.3? Will it be entire 90? Hemant, it will be entire 90? No.
Ma'am, at the time of transfer of money, the fair market value of land was 70 rupees only. And the hello?
Yes, please go ahead.
And in when we sold this land in previous year 25-26, the FMB is 200, and this FMB is on 25-26, not on the previous year in which the cash has been transferred. That's why
Correct.
there will be not be 48(3) deduction will be there.
No. See, 48.3 will still be there. If you look at this, why 100 is paid to Mr. A? This is 200 on account of revaluation, right? So again, as I said, here you will create a revaluation reserve of 200. Now you will pass this reserve to the account of A and B in the ratio of 1:1, 100 and 100. And this is what A is taking. So when this land was revalued, along with that there was plant and machinery revaluation. And this revaluation to the extent of share of A is being taxed under 45(4). So again, there is a preponement of liability. But now, in comparison to the first question that we have discussed, this one, there it was easier to identify कि लैंड का ही रिवैल्यूएशन हुआ था और उसी का टैक्स हुआ था, तो बाकी जो भी पोर्शन है वो हम 48(3) में अलाउ कर देंगे जो हमने 45(4) में टैक्स किया. Here it is not this simple because there could be multiple assets in reality. So how would you do that? So 48(3) does not give that answer. 48(3) what does it say is that the deduction will be allowed which is attributable to a capital asset being transferred, calculated in the prescribed manner. Where it will be prescribed? Yes, where it could be prescribed. So I'll take you to 48(3). In case of value of any money or capital asset received by a specified person from the specified entity referred to in 45(4), the amount chargeable to income tax as the income of the specified entity under 45(4), which is attributable to a capital asset being transferred. So what it is saying is that out of this 90, what is attributable to land will be allowed as deduction under 48(3). But how will you find out what is attributable to land? It says in the manner prescribed. Now, who prescribes or where it is prescribed? Yes, Prashant, in rules. So we will go back to now the income tax rules. Rule 8AB. So 48(3) provides the reference to the rule. If you see, Rule 8AB is what? Attribution of income taxable under 45(4) to the capital assets remaining with the specified entity. So what does it say? Let's read first. For the purposes of 48(3), where the amount is chargeable to income tax as the income of the specified entity under 45(4), the specified entity shall attribute such amount to capital asset remaining with the specified entity in a manner provided in this rule. Okay, fine. Then rule 2 says where the aggregate of the value of money and the fair market value of capital asset received by the specified person from the specified entity in excess of the balance in his capital account. This particular portion, all that it tries to say is B plus C minus D. Aggregate of value and the fair market value of capital asset is nothing but B plus C. In excess of the balance in his capital account is minus D, right? So basically, it is saying the amount which is chargeable to tax under 45(4), if it relates to the revaluation of any capital asset or the self-generated goodwill or self-generated asset, the amount attributable to the capital asset remaining with the specified entity for the purposes of 48(3) shall be the amount which bears to the amount charged under 45(4), the same proportion as increase in or recognition of value of that asset because of revaluation bears to the aggregate of increase in or recognition of value of all assets because of revaluation. कुछ नहीं समझा, right? Let me explain. So what it is saying is, you will find out the amount attributable to the land in a manner that 90 into, what is the revaluation on account of land? 70. What is my total revaluation? 200. Sorry, not total revaluation is, sorry, this is 60 and this is 120. Right? My total revaluation is not 200. My total revaluation is 60 on account of the land and 120 on account of the plant and machinery. So my total revaluation is 180, not 200. 200 is the actual value, right? So what I will do is, the revaluation on account of land, sorry, this is 60 divided by 200 belongs to land, and 90 into 120 divided by, sorry, 180, this should be 180, shall be belonging to the plant and machinery. Are we clear? So this 90 into 60 divided by 180 comes to how much? 30. So 30 rupees will be considered as under 48. So out of 90, you have to find out the amount attributable to the land. How will you find out? So rule 8AB says, for this you have to refer to rule 8AB, which says what? That you have to consider the amount taxed under 45(4) to the revaluation of that particular asset which is getting transferred divided by the total revaluation which has happened. Now if you read, it will make all the sense. Where the aggregate value of money, which is B, and the fair market value of capital asset received, which is C, in excess of the balance in his capital account, meaning minus D, chargeable to tax under 45(4). So which is A. A is equal to B plus C minus D. So what it is saying, the A, which is arrived, where it relates to the revaluation of any capital asset. Then the amount attributable to the capital asset remaining with the specified entity. So now the land which is lying with the specified entity. So A is relating to the revaluation and which is attributable to the land. How will you find out? It will be the amount which bears to the amount charged under 45(4), which is my A, the same proportion as the increase in the value of that asset. What is the increase in the value of land? 60. Because of revaluation. To the aggregate of increase in the value of all assets. So aggregate of increase in all assets is how much? 180. So 90 into 60 divided by 180 is what will be the attributable to land. Are we clear with this? Yes or no? Anybody has not understood this particular point? Yes. Are we clear? If you're not clear, please let me know. I will explain once again.
Ma'am, the value, fair market value is 70 and 130 now. Then why are we taking 60 and 120?
Yeah. See, this is not saying you take the fair market value. the rule 2 is saying what? Sub rule 2 is saying that the amount, or let me put this and copy this and put it over here so that it is easier to break. See, this is saying where the aggregate of the value of money, which is what my B, right? Where the aggregate of the value of the money is B, and which is plus the fair market value of the capital asset received by the specified person from the specified entity. This is C, in excess of minus the balance in his capital account, which is D. So B plus C minus D is what? A, right?
Yes,
So what it is saying is chargeable to tax under 45(4), which is my A, right? Relates to the revaluation of any capital asset. Now this A is relating to the revaluation of land in our case. Relates to revaluation of land and machinery, right? We do not have self-generated asset or self-generated goodwill at the moment. The amount attributable to the capital asset remaining with the specified entity for the purpose of 48(3). So 48(3) will be, shall be the amount which bears to the amount charged under 45(4). What is the amount which is charged under 45(4)? A. The same proportion as the increase in the value of that asset because of the revaluation.
now clear, ma'am.
Yes, it is not saying the same proportion as the amount revalued. The word uses the same proportion as the increase in the recognition of the value of that asset.
Yes, ma'am. Yes, ma'am. Clear.
Yes. So this is going to be my 60 and bears to the aggregate of the increase again in the recognition of all assets, which is 80. So what I have to do here is I have to find out what is the increase due to revaluation. Yes, are we clear about this?
Yes, ma'am. Definitely clear.
Okay.
Thank
Yes,
you.
any other student? Yes. Thank you, Prashant. Any student, any doubt on this? We all should be on the same page. If any one student also has doubt, let me repeat it. In case you have doubt, please raise hand, please put it in chat box, but please be very clear. This is very important question and there is already one question tested in examination on that in May 23. Yes, okay. So let's proceed then further. So year 48(3) will be my 30. Are we clear? Let's go to the next question then. Okay. Now question 3 is, every partnership firm has two partners, A and B, having share capital of 50 and 50 equally. The firm has two assets, stock in trade and sundry debtors. A retired and C was admitted as partner. On retirement of A, the assets were revalued and the cash of rupees 80 was given. The FMV of the assets on the date of retirement was stock in trade rupees 80, sundry debtors rupees 80. So let's again go as per the balance sheet approach. Okay. Now we have two partners, A and B, having 50-50 equally. The firm has two assets, stock in trade 20 and sundry debtors 8. Are we clear? So A retired and C was admitted as the partner. On retirement of A, the assets were revalued and cash of rupees 80 was given. So revaluation was done. What is the FMV on revaluation? Stock in trade 80 and sundry debtors are 80. So therefore, cash of rupees 80 was paid to A. Now what will be my 9B? Yes,
Ma'am, here also the 9B will not be applicable as the transfer is of cash uh, and not SIT. Then we
correct,
consider only transfer. That
correct. So here also my 9B will be 0, not applicable. Now what will be my 45, 4? Sorry, I think the screen sharing stopped. Yes. What will be my 45, 4?
ma'am, the 45 4 will be rupees 30 as B plus C minus D. B is equals to 80 rupees, C will be 0 and D will be 50. That's why the 45 4 will be 30 rupees.
Yes. So this will be 50, sorry, 80, which will be the cash plate plus 0 minus 50. So this is 30. You are right. Yes, Prashant, you are right. Okay. Now, what will be my 48, 3 later? What will be my 48, 3? Let's say stock in trade is sold in previous year 25-26 for rupees 120 lakhs. So what will be my 48?
Uh, Ma'am, uh, the 48 3 will be entire 30 rupees
Okay.
as
Anybody? Yeah.
there is increase of 60 rupees in SIT only and not in sundry debtors. Sundry debtors will be 0.
Okay.
But ma'am, sundry debtors is current asset, na?
Yes. Sundry debtor is a current asset. Sundry debtor is not transferable asset.
Yes, yes, ma'am.
30 will be, Prashant is saying again, will be towards SID. Any other student has different answer? Yes, Kirti, very good. Why do you think it is not applicable, Kirti? Yes, what is the reason do you think it's not applicable? So the answer is 48.3 will not be applicable. My dear students, think about it. Stock in trade when it will be sold. कहाँ
Yes,
टैक्स होगा?
yes, ma'am, understood.
Yeah?
Yes, ma'am.
Yes, Kirti, right. Because there is no capital asset. जब stock in trade sell होगा, you will go to PGBP. So 48 is the deduction which is applicable when you compute your income under the head capital gains. Are you getting that? So you will not get the deduction of 48.3 under PGBP. Every head has specific deductions. Yes, Prashant. No, SIT is not applicable under 45.5 or 45.4, right? So when SIT will be sold, you will go under PGBP. So here 48.3 will be 0 as when SIT is sold, income will be computed under PGBP and not capital gain. And 48.3 is not available under PGBP. This is also given, the explanation is given in the rule 8AB also. So if you look at 8AB, it says where the aggregate of the value of money and the fair market value of capital asset received in excess of the balance in his capital account, which is basically A, because this is saying B plus C minus D, charged to tax under 45.4, does not relate to the revaluation of any capital asset. So where A is not relating to the revaluation of a capital asset or the goodwill or self-generated asset, the amount charged under 45.4, which is A, shall not be attributed to any capital asset for the purposes of 48. Are we getting that? So 8AB3 is trying to tell you the same thing, that when A is not related to the revaluation of any capital asset, nothing will be attributable to 48.3 or nothing will be allowed as deduction under 40. So this is also mentioned by rule 8AB3. Revaluation is on account of stock in trade and not capital asset. Are we clear about this question, students? Yes or no?
Yes, ma'am, very much clear.
Yes, very much clear. Very good. Okay, so let's proceed to the next question. See, the complexity will go on increasing and you have to be very, very cautious of how the question comes in the examination. Okay, question 4. AB partnership firm has two partners, A and B, having the share capital of 50 and 50 equal. Firm has two assets, land and plant and machinery of 20 and 80. A retired, C was admitted as partner. On retirement of A, assets were revalued and the land was given to A. Abhi tak cash de rahe the. Now in this question, we are giving away the capital asset. The FMV of the assets on the date of retirement was land 80, plant and machinery 80. So let's put it in the balance sheet.
Ma'am, your video has been stucking.
Oh, 1 second. Video, audio better? Yes or no? Yes. Okay. So we have two partners, A and B, 50-50. We have land of 20, plant and machinery of 80. Then there was a revaluation on account of which my FMV was 80 and 80. Now their land was given to A. Now what will be my 9B over here? Yes, faster. What will be my 9B? Why everybody is stuck up with 9B now? Kirti 60? Yes. Everybody else, what will be the answer? It will be 60 or what it will be?
मैम 9B 80 rupees 80.
80, 60, okay. See, let's go back to 9B. What it is saying. 9B is saying my computation will be, for the purpose of computation, it is saying that FVC will be FMV as on the date of receipt of capital asset. Okay. Now, assuming the date of receipt is same as the date of reconstitution, everything. It is not telling you that what will be the cost. It is just then telling you that the taxability will be under the respective head, PGBP or capital gain as the case may be. Now, since you have transferred the capital asset, it will be under the head capital gain. So it is only giving you that for the purposes of FVC, FVC will be your FM. But who restricts you to claim the cost of acquisition? See, 45.4 makes a different thing. 45.4 is giving you a whole computation itself. It is saying A plus B, A is equal to B plus C minus C. 9B is just giving you the value of FVC. It is not giving you any other formula, and neither it is stopping you from claiming the cost of acquisition. Are you getting that? So here it will be 9B will be my FVC minus the cost of acquisition. FVC is 80 because this is my FMV minus the cost of land is 20. Because 9B किसके हाथ में टैक्स हो रहा है? किसका इनकम है 9B? 9B is the income of the firm. Firm is transferring the capital asset. So firm will claim the cost of acquisition of that capital asset under 9B. Normal capital gains calculation, students, right? So this will be 60 as my capital. Are we getting this point? So 9B will be rupees 60. Are we clear about 9B?
Yes, ma'am, clear.
Yes. Okay. Perfect. Now coming to 45. What will be my 45? Yes,
Ma'am,
student.
45 4 will be 30 rupees.
30 rupees. Okay. Let's see. Yes, Katie, you're also saying 30. Okay. So this will be my B is 0. There is no value of money. C is the land which is given to me. The value of the land is again to be taken as FMV minus D is 50. So all of you are saying therefore 30 rupees. This is wrong. But ma'am, you taught us this way only. Do we have to think now out of the box? No, you don't have to. I will tell you. So, see students, you are correct. So till now, whatever was taught to you, you were absolutely correct to arrive at the answer of 30. So do not blame yourself that you are not able to answer. That's not the case. You have answered well. So, but look at this students. 9B में भी हम टैक्स कर रहे हैं, 45 4 में भी हम टैक्स कर रहे हैं, 9B में भी you have taxed 80, right? Of course, you have taken the cost as 20. In 45 4 also you are taxing again the 80, and then you are giving the deduction of 50. So to the extent of 30 rupees, if you see, there is double taxation under 9B and 45 4. It's not the same income which is getting taxed. Let's be clear, because 9B may it is the income of the firm from the transfer of capital asset. 45 4 may it is the income of the partner from the receipt of land. So both are different income, but there is double taxation still. So to avoid that double taxation, CBDT circular number 21. So CBDT का जो circular है, which is number 21 number 14 of 2021. Number 14 of 2021. Number 14 of 20. It gives some relaxation from this double taxation which is taking place. Are we getting this point? Now, how is that double taxation relieved by CBDT? So CBDT says what? That the tax which is payable under section 9B. 9B में कितना income आ रहा है? 9B में the income that you are paying is on 60, right? Now on that income, you will have to calculate the tax on the book gains. And that you have to reduce it from the 45. We didn't understand. Let me explain it. How does it work? So in this particular case, what will happen is, let's say for example, this is my capital gain for the income tax purposes. But मेरा book gain क्या होगा? What will be my book gains? It will be the same thing. Under 9B also, my book gains will be 80 minus 20, right? From this, you have to calculate the tax on this. What is the tax on this? Let's assume the tax on this, for time being, I'm not going into 12.5% or 30%, 20%, whatever. We are not going into that. Let's assume the tax is 10 for the sake of simplicity. Okay, I'm not going into the tax rates for the moment. Let's assume the tax is rupees 10. So I have to arrive at the post tax book gains minus 10. I will reduce to arrive at the post tax book gain. Now this will give me how much? Yes, 50, right? Out of this 50, now this 50 will be allocated to A and B. 25, 25, right? So CBDT circular is saying this should not be 50, but this should be 50 plus 20. So you have to add the post-tax book gains which are there. And that you have to consider. So instead of 30 rupees, now my 45.4 will be 5. Are you getting this point? So let me repeat it once again. CBDT circular is telling me that you calculate what is the tax on the capital gain and then arrive at the post-tax book gain. Here, the book gains are similar to 9B. Here, there is no problem. But quite a possibility if, let's say, for example, I am given here indexed cost of acquisition. Let's say my index cost of acquisition is 50. Let's say my index cost of acquisition was 50. Then instead of 20, I would have taken here 50, right? So this would have been 30. Let's say the tax is still same. My post-tax book gains will not be 80 minus 50 because books में थोड़ी indexation रहते हैं. In books of accounts, you don't take indexation. You only do the minus of cost, actual cost. So my book gains will vary from the actual capital gain. Are you getting that? If I would have tweaked this example and said the index cost of acquisition of land is 50, so you would have calculated 9B using the index cost, right? As I told you, 9B there is no restriction on what you will claim cost. You will calculate the capital gain as provided under the head capital gain. 9B only gives you the value of FPC. That's it. You can continue claiming the capital gain as you claim for the rest of the capital asset. But in the book gains, I would never calculate index cost because indexation is never provided in books. It's in the tax law. So to calculate the post-tax book gain, I would have done 80 minus 20 minus 10, which is the tax, which will come to 50. Now this 50, I will allocate to A and B in their respective ratios. And that I will add to my D. So that will give me relief under 45.4. Are we clear about this? Yes or no? So now you will ask me, ma'am, why we have not done that in the past examples? Because in the past example, 9B was never in picture. आपने जो पहले एग्जांपल्स किए हुए हैं इसमें कैश दिया हुआ था, so 9B was not applicable. In all the examples I've taken, the cash is given. I've never taken that the land is given, students. So therefore 9B was never applicable. And when the 9B was never applicable, there is no question of giving you or having the double taxation and giving you relief. Yes or no? Are we clear? Yes. Any question? Any doubt? If you have any doubt, you can please choose to ask me. You can look at it for this example for 1 minute and then we proceed further. Yes, are we clear about this? Clear, Kirti? Very good. Clear, Oja? Okay. Rest of the students, yes or no? Are we clear? Are we on the same page? You have any questions? Please ask me to repeat it. But do not sit with your questions. Yes? Will there be any 48.3 in this case? Please repeat 9B. Yes, Hemant, I will do it. For the rest of the students who have understood, think about it. Will there be a 48.3 in this case? Okay, I'll repeat it once again for the sake of understanding for everyone. So here, if you look at it, my 9B is what? 9B is the FVC minus the cost of acquisition under the head capital gain. FVC is told to me under 9B will be the FMV as on the date of receipt of capital asset, right? Which is rupees 80 in our case. My cost of acquisition will be 20. If indexed cost is provided, you will take the indexed cost, which is 50. Then my 9B will be 30. On that, I will calculate the tax. I'm assuming that the tax is rupees 10. I'm not going into tax rates. And then I will calculate the post-tax book gains. Under the book gains, I will not consider the index cost because books mein indexation nahi milta hai, right? So I will calculate the actual cost. And the book gain will be 80 minus 20 minus rupees 10 of the tax. So this will give me 50. 50 will be divided between A and B. Clear, Hemant? Yes or no? Any question? Any doubt? Yes? Okay. Now what about 48.3? Prashant, I will repeat the circular. So the circular says, Prashant, that you will attribute the post-tax book gains. See, in the books of accounts, what you will do is, you will pass the entry for this land transfer. When you give the land to Mr. A, right, the land itself is going. What entry you will pass, Prashant? You will pass the entry A2 land, which is 20, right? To P&L, to profit and loss account. How much profit will be? 80 minus 20, because I am not receiving any consideration from A. So I will give it at the fair market value, right? So the profit will be technically 60, right? So 80 is given to Mr. Prashant. Sorry, Mr. A. So 20 plus 60 is 80 is given to A, right? Now, what will happen is, there is also a tax cost involved of rupees 10, right? So technically, you will not give him 60 as the P&L. You will not credit 60 to the P&L. You will also reduce the tax obligation. So when you credit to A, the book gains, what you will do is, you will credit the 60 minus 10 is equal to 50. Now this 50, which is profit and loss, which is there, this belongs to both A and B. Right? This 50 belongs to A and B both. So 25 is the profit which you will give to A. And 25 is the profit which you will give to B. So circular is telling you, when you take here the capital balance, you will not take 50, you will take 50 plus 25. Because when in the accounts, you will pass the entry, it will be like this. It will be, sorry. Yeah. It will be like this. And then separately you will pass an entry P&L to A to B 25, 25 and are we clear? So my capital balance of A, if you look at the capital balance of A, let's say the opening balance is 50. You will credit your P&L of 25. So the circular is telling you to take 75 and not just 50. Yes, Prashant, is it clear? Yes or no? Are we clear? Anybody has any doubt? Now, what will happen to 48.3? Yes, Keiti, very good. 48.3, will it be available? Yes. Yes, students, tell me about 48.3. Why there is silence? I need the answers. Give the wrong answers, that's fine. Nobody is judging you. 48.3 is 5. Hemant, you're saying 30? No. 48.3 is not applicable. Why is it not applicable? Because the asset itself is transferred. What was the logic of 48.3, students? Logic of 48.3 was that there is a preponement of liability on that asset on account of revaluation. इस केस में asset तो sell ही हो गया. अभी तक what cases you were doing, the asset was sold at a later point and the gains actually were being realized at a later point. And you were preponing the liability under 45(4) by giving the cash on account of revaluation. Here you are giving the asset itself. Here you are giving the asset itself. So there is no question of any remaining asset which is there. हाँ, अगर और कोई भी asset रहता plant and machinery में तो revaluation नहीं हुआ है. Let's say there would have been additional asset. Let's say plant and machinery would also have been revalued at 120. Then yes, 48.3 would have been there. But here, there is no revaluation in any other asset. And revaluation was only on land. And the land itself is transferred. So 48.3 will not be applicable as the revalued asset is transferred. Are we getting this point? So if you look at it under 48.3, yes. If you look at 48.3 and rule 8b along with that. So para 4 says, notwithstanding anything contained in 2 or 3, where the aggregate value of money, which is B, and the fair market value of capital asset received, which is C, in excess of capital balance, which is D. So which is A, which is charged to 45(4), relates only to the capital asset received by the specified person. The amount charged to tax under 45(4) shall not be attributed to any capital asset. No problem, Ojha, that's fine, absolutely fine. We are all learning. And with this mistakes, you will in fact not make any future mistakes. So in fact, I would suggest write it down, those who made this mistake, write in the red letters in your notebook that it will be not applicable. Are we clear? Yes. So here rule 8AB4 clearly tells me that 48.3 is not applicable as the revalued asset is transferred. Are we all on the same page, or are we all having the same clarity? Yes. All of us, before we take a break, I need yes from all of you, right? Because then only I will have an assurity that you are able to understand. Yes.
Yes, ma'am.
Okay. Okay. So let's take a break for 10 minutes and then we get back. Yes, good, Prashant. Okay, so let's take a break of 10 minutes. I would suggest get refreshed in those 10 minutes because you need a break because these are very heavy concepts that we are discussing, students. So let's take a break of 10 minutes and then we get back and we sit on again 45-4. Okay? Yeah. our discussion. Let's move to the next question. Okay. Question number 5 and the last question for you. Okay. I'm not going to bother you more after this. ABC partnership firm has 3 partners, A, B, and C, having share capital of 100 each. Okay, let's do one thing. That you read it for 1 minute. Yes. Have you read it? Because it has too many facts, so I'm just going to start preparing the balance sheet for this. While you read the question. ABC has 3 partners having share capital of 100 each. A, B, C, 100 each. Then what does it say? Firm has following assets: land, patents, and cash. Land is 30, patents is at WDV 45, and cash of 225. On retirement of A, the assets were revalued and cash of 75 lakh and land was given to A. The index cost of land was 45. Okay, and the revalued amount is FMV is given. In the FMV, you have land 45, you have patent 60, and they say that you created a goodwill of 30 lakhs. Now compute the capital gains in the hands of the firm. That's the first part of question. So what will be my 9B? Okay, students, now you have to be very quick. What will be 9B?
Ma'am, 9B will not be applicable as cash has been given.
No, but the question says cash and land both. So cash of 75 and land was given. So cash of 75 and my land is given.
The land is also given.
Yes. Yes, students, are you all too tired now to answer me? Or you too tired, to understand these complex concepts? We are not even halfway through capital gain. Remember that, huh? We're still under 45. Imagine. We have not even touched, like crossed 45. What will be 9B? I need your answers. This is the last question for you to practice on 45.4 and 9B. Yes, faster. Is 9B so difficult? 9B is the most simplest. 45.4 is difficult. Okay, give me the wrong answer. That's fine. You have to just attempt to answer so there is nowhere you're going wrong. It's for both of our understanding. What is 9B? What is FPC? Okay, forget everything. What is FPC for the purpose of 9B?
$45.
45 is the FPC. Yes, you are right. 45 is my FPC. Correct, Hemant? Yes. So I will write here FPC is equal to.
Ma'am, 9 becomes 0.
We have the chargeability under 9B. 9B is not giving you any head of income. Huh? So which head you have the chargeability? Which is the head of income in which you will charge under 9B? Capital gain payment. Correct. Because you are transferring a capital asset. If you would have transferred stock in trade, then PGBP may tax cut. So this is under the head capital gain, right? So FVC is 45 minus what?
Index cost of acquisition.
Correct. Index cost of acquisition. What is index cost is 45. Correct. So 45 minus 45 lakh is equal to 0.
0.
Correct. So 90 के अंदर तो कुछ tax नहीं होगा. Will there be any tax on this? Answer is no. Right? Because 9B, it is absolutely 0. So my tax will also be 0. Or shall we make it a little more complicated? Let's make it index cost as, let's say, or let's say my FMB, I'll change it, I'll make it to 60. Because otherwise it's not, real understanding. So let's take this as 60 and 45. Accordingly, you will change in your question also. So this is 15 lakh. Now, let's say the tax on this 15 lakh is, let's say, 3 lakh. Right? Let's assume for an example, because, if I do 12.5% of this, it will be in decimals, so I don't want it. So this is an assumed number. Okay, for the moment. Now, what will be my post-tax book gain? What will be my post-tax book gain? Yes? Okay, forget that. Tell me what is 45 for first. What will be my 45 for? What is my 45 for now? What is B? What is B? 70,
75 lakh.
right? 75. Yes, Hemant, right. 75. Okay. So my B is 75. What is C?
C is 60.
C is 60. Correct. So C is 60. Minus D is now, you will write refer working. See, this is the rough working that we have been doing. So in the examination, you will not calculate like this. In the examination, you will write income under the head capital gain. Right? First is 90, second is 45. And for the purpose of calculating D, you will go to a working note. There you will write working note number 1, calculation of capital balance of A, which is D. Right? So what is my capital balance? What is my capital balance? It is 100, right? Plus share of A in post-tax book gains. Now, what is my book gain, first of all? What is my book gain? Yes.
Book gain is 12 lakh rupees.
Yes. So, book gain will be what? It will be 60 lakh, which is my FMV, minus the cost of acquisition and not the indexed cost. Do not make the mistake of taking the indexed cost, because indexed cost books में नहीं मिलता. Minus the tax amount, which is how much? 3 lakh. So tax amount I have assumed is 3 lakh. So 60 minus 30 is 30 lakh, minus 3 lakh is 27 lakhs. 27 lakh, and there are 3 partners. There are 3 partners. So 27 divided by 3 comes to 9 lakh. So how did you get 12 lakh?
Ma'am, actually I have deducted the index cost of acquisition, that's why.
Yeah. So do not make a mistake here. You can just write down
Yes,
what is my index cost here. Index cost was 45. So you don't have to make a mistake, because in the books of accounts, indexation is not available. That is for the tax purpose that you are taking the index cost. Yes, Kirti, you have also made the same mistake. Is it clear? So my post-tax book gain is 9 lakh and not 12 lakh, students. Are we clear till now? So what will be my D? D is 109 lakh, right? So minus 109 lakh. What will be my answer? Please calculate for me.
26 lakh, ma'am.
26, okay. Now this is my 45. Okay. Now tell me one thing. Okay, here you will make a reference of CBDT circular number 14 of 20. You will make this reference and you have to remember the circular number. Now, will there be a 48.3? Because the question also asks you, there was a second part to the question, if you see. Assume the patents were sold in the next AY 26-27 for 30 lakh or for rupees 60 lakh. Now, in the AY 25-26, 26-27, let's say the patents are sold for sale consideration of 30 lakh or 60 lakh. So this is my sale consideration, right? Now, my cost of acquisition of patents will be how much? My cost of acquisition of patents will be how much? Yes, what is the cost? It's very simple. 45 lakh, right? Cost is what? What will be the answer of capital gain? Yes, students, are you with me? What will be the capital gain in the first case? Yes, think about it. Will there be a capital gain at the first place? Yes, 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 fast. Nobody is giving me any answers now. Yes? Okay, let me explain. All of you are confused by now. Can WDV be the acquisition cost? Yes, Hemant, a very good question. I wanted you to come on that point itself, and that's why I think everybody is confused. So, students, tell me, what is the confusion arising on? कहाँ आप confused हो रहे हो? What is the point that you are stuck up with? What you are thinking? Where are you stuck? So that's where your answer lies. What is the question that is coming to mind? कि कहाँ अटक गए? Yes, there must be some confusion where you are stuck, and that's why you are unable to answer. What's that point? I want to understand that.
Ma'am, here the WDV has been given and the cost of acquisition is that amount at that the patent has been created or purchased.
Yes,
That's why, and this is the amortized value. Uh,
yes, yes,
that's why.
yes, absolutely. So that is the point where you have to get stuck. See, IPCC may you had done one concept. Of course, we will also do it now. We haven't done that, so maybe you're stuck up that and you've forgotten that. Depreciable assets, when they are sold, do you get the capital gain? The answer is no. So, the capital gain on the sale of depreciable assets is under section 50A, if you remember in IPCC. So, only when the block ceases to exist or the sale consideration is greater than WDV, only in that case you will have the capital gain. Yes, Vignesh, very good. So when sale proceeds exceeds WDV or the block ceases to exist, in that particular case, you have the capital gain under section 50A of the Income Tax Act. And that is deemed to be the short-term capital gain, students. That is deemed to be the short-term capital gain, if you remember. Are you able to recollect that point? Yes or no? So now think about that. So here in the first instance, what is my sale consideration? My sale consideration is 30 lakh. So under 50A, whether I will consider the capital gain, the answer is no. Because we do not have information about whether the block has ceased to exist. At this moment, we are able to see, okay, patents are there. But the block has not ceased to exist. Has the block ceased to exist? Has all the patents been sold? We do not know that. We do not know. So, if we say that the block has not ceased to exist, there is no capital gain in the first case. Are you getting that? So, in this particular case, what will happen? When the sale consideration is 30 lakh, you have even done PGBP. At that point in time also it would have been taught to you, right? So WDV is my 45 lakh minus the cost of acquisition. In PGBP you would have done that minus the money payable on the sale or disposal of asset, right? You do 30 lakhs. It's a block of asset concept. You forgot PGBP while doing capital gain? No, right? So here, this is what would happen in the first case. In the second case, my sale consideration is greater than WDV. In this case, it was less than W. So in this case, I will have my FPC as 60 lakh minus the cost of acquisition will be 45 lakh. Right? Now, what about 48.3? This will be calculated under section 50A and this will be deemed to be short-term capital. So if you go to section 50A, what does it say? Where the capital asset is an asset in respect of which a deduction on depreciation has been claimed under 32(1)(1). The provision of 48 and 49 shall apply. 48 is what? Computation. 49 is what? Cost of acquisition. To the modification that the written down value as defined in 43.6 as adjusted shall be taken as cost of acquisition. So 58 says that the cost of acquisition will be my written down value. Are we getting that? Yes or no? So now if that be the case, here I will consider this as 45 lakh as my WDV as the cost. And in the first case, the block has not ceased to exist. The WDV is more than sale consideration. So there it will not be capital. Now tell me what will happen to 48.3. What about 48.3? Will 48.3 be attracted here? First of all, calculate what is 48.3 in the first case. Will there be a 48.3 in the first case? Yes. Will there be 48.3 in the first case? What do you think? You have understood all the concepts and therefore you should be able to answer this. Yes, yes, yes. 48.3 applicable on this or not? At least even if you're not able to answer, tell me what are the thinking points that are going in your head at this moment. Depreciable asset में 48.3 मिलेगा. सी, ये जो फर्स्ट पार्ट है, where sale consideration is less than WDV. आप ये बैलेंस कॉस्ट का करोगे क्या? What would you do with this balance cost? You have a cost, right? 45 minus 30 is 15 lakh. So what would you do with this? What will happen to this amount? At least you have to tell me this answer. This you have done in your PGBP chapter. Haven't you done, or have you done that? At least tell me that. Yes, Kirti, you are right. But there is a CBDT circular for that. Yes. What would you do with this 15 lakh, which is the balance amount? What would be this 15 lakh treated as? PGBP students, 15 lakh on this amount will be the balance WDV, right? This 15 lakh will be balanced WDV and you will charge the depreciation on this at the rate of 25%, right? This is what you would have done in your PGBP class, yes or no? Basic. WDV minus my, not cost of acquisition, minus my money payable will give me the WDV. On this WDV, I will charge the depreciation. Now, will you get 48.3 under the first instance? The ideal answer should be yes or no? Ideal answer should be what? Will you get 48.3 or not? Yes? Now it should not be very difficult. WDV is chargeable, or the depreciation on that WDV is chargeable under which head? Is chargeable under which head? Arey Baba, depreciation you claim under which head? Capital gains. PGBP Vignesh. Yes, correct. So PGBP में 48.3 मिलेगा? No. PGBP में 48.3 नहीं मिलेगा, right? PGBP will never give you the claim of 48.3 because 48.3 is a section under the head capital gains, isn't it? So therefore, you will not get 48.3. However, the CBDT circular says, the same circular that we are referring, circular number 14, it says in order to provide parity to depreciable and non-depreciable asset, circular number 14 extends the benefit to the depreciable asset. Otherwise, what will happen is non-depreciable asset रहता, so you would have claimed 48.3. But since it's a depreciable asset, you are not allowing them the 48.3 because the computation is under the head PGBP. So circular is extending the benefit of 48.3 even to a depreciable asset. So you will write here the 48.3 is not applicable as computation is under PGBP. However, circular number 14 of 21 extends the benefit to depreciable assets to bring the parity. Now what will be 48.3? अब 48.3 है कितना? That तो you will have to calculate now for me. What is 48.3? What does rule 8AB says? What is the amount of 48.3? 26 lakh into what? Will you get 48.3 for land? Will you get for land? Yes or no? Will you get for land 48.3?
No, ma'am.
No. Why no?
Because the land has been given to the partner.
Correct. So 8AB also says that if the asset itself is transferred, where the revalued asset is itself transferred, 48.3 will not be applicable. 8AB4. This is what we have even done in the last problem. So this is not applicable as per 8AB4 as asset is transferred. What about patent? Ideally, it should not be applicable, but circular number 14 of 21 extends to depreciable asset. So what is my increase due to revaluation? Increase is here 15 lakh. On cash, whether it will be applicable? On cash, whether it will be applicable? Very simple answer, yes or no? No, right? Yes, Kriti. On cash, it will not be applicable because cash is not a capital asset and there is no revaluation also of cash. On goodwill, whether it will be applicable. On goodwill, whether it will be applicable? Yes. Because there is a new goodwill created. So on goodwill, it will be applicable. Okay. So on goodwill, it will be applicable. So yes. And what is the increase? 30 lakh. So my total increase is 45 lakh. So my 48.3 will be 26 lakh into, sorry, 26 lakh into 15 lakh divided by 45 lakh. And this will be 26 lakh into 30 lakh divided by 40. Are we clear? So what will be my 48.3 in the first instance? Please calculate for me. What is 48.3 for patents? Calculate the answer. 8.67 lakh. Okay. And the second one? 17.33. Okay. Now, as far as the patent is concerned, how will you adjust while calculating the depreciation? So here, what I would do is circular number 14 says that while you calculate the sale consideration, while you calculate the sale consideration, the money payable which is there, reduce the money payable by that much. So here my money payable will not be 30 lakh, it will be 30 lakh minus 8.67 lakh. 8.67 lakh. So this will be what, 21 point, how much? 43, right? This is what it would be, right? So this is how you will give the benefit of 48.3 in the case of depreciable asset. Now what if the sale consideration is greater than WDV? In case my sale consideration is greater than WDV, then you are already under the head capital gain. But your computation is not under section 48. Your computation is not under section 48, students. Your computation is under section 50. Your computation is under section 50. And what does section 50 says? Let's read it. The cost of acquisition under 50A was my WDV. But what does 50 says? 50 says, notwithstanding anything contained in 242A. 242A is nothing but the period of holding of capital assets, where the capital asset is an asset forming part of the block of assets in respect of which depreciation has been allowed under this act. So it is saying, notwithstanding what is the period of holding of those assets, whether it is 12 months, whether it is 24 months or 36 months, doesn't matter. Irrespective of the period of holding under 242A, where it is a capital asset forming part of the block of asset, meaning it's a depreciable asset, the provision of 48 and 49 shall be subject to the following modifications. So it is, see, 48(3) के अंदर you have this deduction of the 45(4). But section 50 is overriding section 48. What it is saying, where the FVC accruing as a result of transfer of asset exceeds the aggregate of the expenditure incurred, WDV, and the actual cost. Such excess shall be deemed to be the capital gains arising from the transfer of short-term capital assets. Are we getting that? So, as I told you, under section 50, the capital gain on depreciable asset will arise only when the FVC is greater than the WDV, or where the block of assets ceases to exist for the reason that all the assets in the block are transferred. Then in that particular case, there will be a short-term capital loss. Are we clear? So here the computation is under section 50. And 50 says what? FVC minus WDV is your short-term capital. So 50 is overriding the entire 48 computation. So there is no question of applicability of 48(3). So here also 48(3) is not applicable as computation is under section 50. So therefore, here also circular number 14 of 2021 extends the benefit to depreciable assets to bring the parity. So here what you will do is, here you will calculate 48(3) as per CBDT circular, which is 8.679. And then you will have a short-term capital gain. Are we clear about this problem? Yes or no? Are we clear? Why is this complexity arising here? Because Here there was a depreciable asset. See, this is a very well an exam question. This could be asked in the examination. So do not think that if it's so tough, it may not be asked. It could be asked as a part of case scenarios. It could be asked as a part of the exam adjustment also under the head PGPP, where you will have to calculate, let's say, depreciation on the capital asset. It could be as a full-fledged sum on the partnership. So you have to be conceptually clear. Only then you will be able to solve any question there. If you are going to mug up this thing, you will not be able to solve anything. You will only make the errors. So are we clear about this point? Yes or no? This was the final question that we had done. If you have any questions, please ask me. I'm giving you 1 minute's time to just have a look at it and see if you are able to understand everything perfectly. Yes or no? Yes, students, is it clear? I'll just quickly recap what we have done so far so that it consolidates everything for everybody. In case you have still any questions, you can ask. Number one, 9B, what do we tax? The capital asset and stock in trade, SIT plus capital asset. In the case that is given at the time of dissolution and or reconstitution. Dissolution or reconstitution. Are we clear? So 9B, the trigger event is dissolution or reconstitution. In the happening of that event, you give the SIT or capital asset. Under which head the chargeability will occur? Chargeability will occur in the head if it is SIT, PGBP, if it is capital asset, capital. So under the respective head, you will charge. That is 9B. Chargeable in whose hands? Firm. What will be my computation? Computation will be as per PGBP or capital gain as the case may be. If it is SIT, you will take the FVC as the FMV of the SIT as on the date of receipt, minus you will do all the cost that you claim under PGBP. So the normal computation that you allow the cost under PGBP, the same you will allow them. So my purchase cost, transportation cost, whatever cost will be there, will be allowed under the head PGBP. Right? If it is capital asset, the computation is under capital gain. So my FVC again will be the FMV as on the date of receipt of capital asset. Minus cost mein, you will claim cost of improvement, cost of acquisition. Instead of cost of acquisition, you can claim indexed cost of acquisition if that is applicable. Right? And on the capital gain, you can also claim 54, 54F, 54EC, whatever it is there. So the normal computation will follow under both the heads. That is 90. Come to 45.4. 45.4 is what? The income on the receipt of the capital asset or money by the partner, but it is taxable in the hands of a partnership firm. The trigger event is reconstitution. Your dissolution is not there. Right? So 45(4) gives its formula. What is the formula? A is equal to B plus C minus D. B is my money, C is my FMV of asset, and D is the capital balance. Now, it is possible that when the capital asset is given on the reconstitution, there could be the trigger under both 9B and 45. Right? There will be trigger under 9B and 45. So, circular number 14 of 2021 tells me that you increase the capital balance with the post-tax book gain of that partner. The share of that partner in the post-tax book gain, you will increase the capital balance by that. So by calculating the post-tax book gain, I will not consider the indexed cost. Right? I will not consider the indexed cost. If, let's say, for example, the partnership would have claimed 54, 54F, 54EC, whatever. Let's say on 9B, the amount of 9B, the capital gain on 9B, the partnership is depositing in the, let's say, some bonds. Or let's say it is availing any other exemption under 54. While calculating the post-tax book gain, I will not consider that. Because book gain is what? FMV minus the cost, simple, and minus the tax amount that you have actually considered the tax on the capital gain under 9. So tax you will consider on the actual capital gain because tax का ही तो costing किया है आपने पूरा computation किया है. But while calculating book gain, the cost will be the actual cost and not any indexed cost or something like that. Are we clear? So my book gain is something that I will calculate post-tax book gain and distribute the share to that partner, and the capital balance will be increased by that. That will give me the amount to think. Are we clear? Then we have the 48(3). If the asset is sold in future, but the tax was collected today because of the revaluation on that asset. So when the asset is actually sold and the amount is realized, you will give the credit of 45(4) tax paid to that amount attributable to that asset. Now, what is the amount attributable to that asset? It is the increase in revaluation on that asset divided by the total increase in revaluation. That will give me the amount attributable to that asset of 45(4), which I will allow in 48. 48(3) is not applicable if the revaluation is not on capital asset. If revaluation is on stock, I will not allow 48(3) because the calculation will be on the PGB. I will not allow 48(3) if the asset itself is sold. If I have revalued the land and I have given that land itself, I will not allow 48(3) because there is no preponement of liability. The asset is itself sold out now. But I will give 48(3) if it is a depreciable asset. So even though for a depreciable asset, the computation will be under the head of PGBP because you will reduce from the WDV the sale consideration or the money payable. But I will extend 48(3) and I will reduce the money payable by that. Or if the computation is under 50 because the sale consideration was greater than WDV or the block ceased to exist, I will extend the 48(3) to that particular computation of section 50 also. This is provided by CBDT circular. So although section 50 says 48 will not apply, but the CBDT is extending that benefit by way of a circular. Are we clear up till this? Is this summarization very clear? Any doubt, any confusion at any particular place you have? Please feel free to ask. If not, at least mention me if this is very clear. Yes, perfect. Last one point over here. Okay. Now, see students, we have not yet touched upon what is short-term capital gain, what is long-term capital gain that has undergone the change also this year. We will discuss that. But here, I need to mention to you, how will you understand whether this is short-term capital gain or long-term capital? See, for 9B, the period of holding is what we are trying to understand. So for 9B, it is easy. The period of holding is actual period, right? Is on actual basis. Because what you are transferring is the asset. So the time when the firm bought the asset and the time when it gave to the partner, that is my actual period of holding, and that is what is taxable in the 9B. That is very simple to understand. But under 45(4), what is my period of holding? Under 45(4), what is my period of holding? See, under 9B, it is very clear because what you are transferring is the asset itself. So you can understand what is my period of holding. But how the period of holding will be determined under 9B? That is the question. Right? Because under 45(4), the income is of the partner taxed in the hands of the firm. Under 45(4), the income is of the partner. Under 9B, period of holding is actual because this is the asset transferred by firm and taxed in hands of firm. Right? But here, in this case, it is the asset, which is the rights, or I can call it as partnership rights, transferred by partner, but taxed in the hands of firm. So here it is not very clear as to how will I calculate the period of holding. Are you getting my point? So therefore, we have something called as Rule 8AA. We have Rule 8AA, which gives us the guideline as to how do we calculate the period of holding. So let's look at it. See, Rule 8AA. So the period of holding shall be determined in the following manner. So if you just read the para 5 or the clause 5, don't read 1, 2, 3, 4, that is for the other assets. In case of the amount which is chargeable to income tax as the income of the specified entity under 45(4), the amount or part of it shall be deemed from the transfer of short-term capital asset if it is attributed to following assets. So, what is it trying to say is that the way you calculate the attribution for 48(3), similarly you determine the period of holding. If the attribution of 45(4), if the revaluation has happened because of the following assets, if it is attributed to the short-term capital asset or depreciable asset or the self-generated asset or self-generated goodwill. Then it will be considered as short-term capital gain. Else, if it is attributed to a long-term capital asset, the amount or part of it shall be deemed from the transfer of long-term capital asset. If it is attributed to the capital asset which is not covered by 1 and is a long-term capital asset. So if it is attributable to a long-term capital asset, then it will be a long-term capital. So let's go back to this example. For example, if you look at here, here for the purpose of 9B in our earlier example when the land was given, If the land is a long-term capital asset, it will be long-term capital gain. If it's a short-term capital asset, it will be short-term capital. So 9B is based on the actual period of holding. Let's say the firm has bought the land in, let's say, 2020, and today is what, 2024. So under 9B, let's say this was purchased in 2020. So this will be long-term capital gain based on the actual period of holding, right? As greater than 24 months. Are we clear? So that is based on the actual period of holding. However, for the purpose of 45(4), whether it will be long-term or short-term. See, 45(4) mein, the taxability is not because the land is transferred. 45(4) mein, the taxability is because the partner has lost his partnership right. And in consideration of that right, he is getting the land. So 45(4) mein, the taxability is not arising because the land is transferred. For that, the taxability was under 9B. See, Income Tax Act is not stupid to include two sections for the same thing. So 45(4) mein, the taxability is because the partner has lost his right. So you are considering the value of the land as your sale consideration by including it in the amount C. Your cost of acquisition is your capital balance, which is D. B plus C minus D is what? B plus C is my sale consideration. D is my cost of acquisition. Right? So 45(4) mein, it is not, you don't have to take the period of holding of land. So what rule 8AA says is, my rule 8AA says, the period of holding will be as per the patent and goodwill. The amount which is attributed to patent. Now patent is a depreciable asset. Right? It's a depreciable asset. So it will be short-term capital gain. And the self-generated goodwill is also specifically given. So this will be short-term capital gain as per rule 8AA. Go back to the earlier question. This one. Here again 48(3) was not applicable because the revalued asset itself was transferred. Are we clear? But in this particular case, what will be my capital gain? Whether it will be short term or long term. Yes, in the earlier case, what it will be? There it will be long term. If let's say the land is long term, that's why we have taken the index cost also. So here, this particular 5 was attributable solely to land, right? So this will be a long-term capital asset, which is not covered by a short-term capital asset. It's a long-term capital asset. So this will be a long-term capital gain. So you will decide based on the attribution. Are we clear? Yes or no? Any question, any doubt so far? Yes. Are we clear about the period of holding also? Any confusions? Any doubts? Yes, okay, perfect. So this ends your 45(4) entirely. You must be thinking, this is as good as the entire capital gain chapter itself, isn't it? Isn't it? It's feeling like, you have done almost the capital gain chapter itself. It was so vast. But we are just on 45(4). We have still so many sections left. We have not even completed the very first section, which is the charging section of capital. So let's move ahead. But believe me, now nothing more is as complicated as this. This was the majorly very complicated section. Let's do very light sections now. $45,500. Now, what is $45,500? Let's read $45,500. This you have also done in your IPCC. Okay. So it says again, notwithstanding anything contained in subsection 1. So 45,500 is also trying to override your subsection 1, where the capital gain arises from the transfer of a capital asset, being a transfer by way of compulsory acquisition under any law. Compulsory acquisition under any law, if you remember, I told you this is specifically included in the definition of transfer under 247. Ma'am, we have forgotten everything while doing 45.4. We forgot what we did in the first class also. Isn't it? Yes. So definition of transfer. Compulsory acquisition of land. This is specifically regarded as transfer, if you remember. Right? So 45.5 is now bringing to tax the same thing. What is 45.5 saying? One second. Give me a minute. Compulsory acquisition. Okay. So what is 45.5 saying? Where the capital gain arises from the transfer of a capital asset, being a transfer by way of compulsory acquisition under any law, or a transfer the consideration for which was determined or approved by the central government or RBI. And the acquisition or consideration for such transfer is enhanced or further enhanced by any court, tribunal or other authority, the capital gain shall be dealt with in the following manner. The capital gain computed with reference to the compensation awarded in the first instance, or as the case may be, consideration determined or approved in the first instance by the central government or RBI, shall be chargeable as income under the head capital gain of the previous year in which such compensation was first received. So let's understand this with an example. So first of all, compulsory acquisition is regarded as transfer under 247. Right? Now let us understand this with the help of an example. Suppose my land is acquired. Let's say, for example, my land is acquired, which I had purchased in 2001, the cost of which was, let's say, 10 lakh. So let's say I have a plot of land which I have acquired in the year 2001 and my cost of which was, let's say, 25 lakh. Right? Now this land has been acquired by the government in, let's say, 2006 for, let's say, the agreed value of maybe 55 lakh. So let's say compulsory acquisition in 2006, let's say for 55 lakh. Are we clear? Now the compensation was received by me in two installments. One in 2010, let's say 30 lakhs, and balance in 2011, let's say 25 lakhs. And then I received the enhanced compensation because I disputed it in 2000 and let's say 12 of rupees 5 lakh. Now, I also received the interest on this enhanced compensation of let's say rupees 1 lakh in same year 2000. Now, if 45.5 was not there, as per section 45.1, there is a transfer under 247. The transfer shall be taxable in which year? The capital gain shall be taxable in the year in which the capital asset is transferred. Right? As per 45.1, the capital gain is taxable in the year in which the asset is transferred. In which year the transfer takes place? In which year the transfer takes place?
2006.
2006, right? But the 45.5 is saying what? Yes, Vignesh, you're right. 2006. But my 45.5 is saying, if you look at it, says notwithstanding anything in one. So whenever the year of transfer is changed, there is a specific charge created for that. So it says that notwithstanding one, the compensation which is there, or the capital gain which is there, shall be chargeable as the income of the previous year in which the compensation is first received. So the charge is modified. The year of charge is modified. So here we will calculate the capital gain in the year 2010 and not in the year of transfer, which is 2006. Now, what will be my full value of consideration? Obviously, in 2010, I have received only 30 lakhs, so we will only consider 30 lakhs. Less the indexed cost or the cost of acquisition, as the case may be. That I will consider. Let's say, for example, right now I'm considering 25 lakh. What will be my period of holding or the indexation period? It will be from 2001 to till what date?
2006.
2006. Yes, it will not be until 2010 because the asset ceased to exist by 2006. Are we clear? So this will be my 2006. My indexation will also be available till that. So this will be my calculation in the year 2010. Are we clear? Now, what about the balance compensation which is received to me? Yes. Sorry, this will be not. Sorry, my mistake here. This is not 30 lakh. This shall, sorry, it shall be 55 lakh. Because the amount is already determined. Sorry. This amount is already determined, even though it is given in two parts, but the amount was already conveyed to me that it will be given for 55 lakh. The land is taken 55 lakh. So we'll charge the FPC to 55 lakh. Because the capital gain will be taxable in the year in which the compensation was first received. Now, what about the enhanced compensation? So for the enhanced compensation, this shall be taxable in the year 2012. Now my FPC will be 5 lakh. What will be my cost of acquisition? Yes, Oja.
Ma'am, can you please explain this concept of enhanced compensation when we will receive it?
Yes. See, what happens is that sometimes we are not happy with the compensation that the land, that the government is giving. So, it's very common practice these days. If you see, even in the city of Ahmedabad, I have witnessed, they are acquiring the nearby lands to widen the road. Okay, so the government comes up and acquires your land, which is your particular ownership is there. It will acquire that land compulsorily and will give you certain compensation because they want to do some infra projects. They want to widen the road. For example, even recently, if you see, Atal Setu was done in
Yes,
Mumbai. So they wanted to build that thing. Or for that matter, the coastal road was built in Mumbai. So they wanted to do that. And there may be certain land which may be owned by somebody and they wanted to acquire that land because they want to develop that project. So they will give you the compensation. Now, if you're not happy with that compensation, you can dispute that compensation to the court and the court will grant you the enhanced compensation by ordering to the central government to pay this enhanced compensation. Now,
okay.
enhanced compensation may be received in some year later when the disputes are resolved. So, it will be taxable in the year in which it is received. So, if you see the point B, it says the amount by which the compensation is enhanced or further enhanced by court, tribunal, or other authority shall be deemed to be the income chargeable in the year, in the previous year in which such amount is received by the assessee. Now, cost for that.
मैम योर
What
वीडियो
will be the cost?
स्ट्रक,
Sorry?
आपका वीडियो यानी रुक गया था।
Okay, one second. See.
अभी ओके है मैम।
Okay, yeah. Now, what will be my cost for the enhanced compensation? Nil. Yes, Vignesh, you're right. So, cost will be nil over here because there is cost which is already provided the deduction.
यस मैम।
Are we clear? So, in this case, if you read the explanation, it says in relation to the amount referred to in clause B. Clause B was enhanced compensation. The cost of acquisition and the cost of improvement shall be taken to be nil. So here it will be nil. So this will entire 5 lakh will be capital. But whether this will be a short-term capital gain or a long-term capital gain, how will you decide that? So that will be decided based on the original assets period of holding. So if the original asset was a long term, so based on period of holding of original asset. So in this case, it will be long term. If my earlier asset, if my asset which is taken up, if that is a long term asset, this will be long term. If it is a short term asset, it will be short term. Are we clear? Now, what about the interest portion on this? Okay, one more point before we go to interest. If, let's say, for example, during the dispute of the court, if my compensation is reduced instead of enhancement, then the AO has the power to reduce the compensation by passing a rectification order. So the AO can also rectify the order under section 155 if the compensation is reduced. Are we clear? Now, in this particular case, if let's say, for example, the compensation is decided by way of an interim order of the court. The court sometimes passes the interim order pending the final decision. It will not be taxable. The compensation will only be taxed when the final order is passed by the court. Are we clear? So only when, let's say, you can write it here. Here you can write the original asset period of holding. Right? The compensation shall be or enhanced compensation, you can write, shall be taxable based on final order of court and not the interim order. And not the interim order. Are we clear? If the compensation is reduced, AO can rectify the order under section 1. So if the assessment order would have already been passed, computing the capital gain, now the AO can rectify the order if the compensation is reduced. In case, let's say, for example, you would have paid, let's say, legal fees to take this dispute or to fight this dispute. So you would have paid some legal fee to the lawyer, let's say 30,000. So you can claim that as the expense on transfer 30,000. It's not that you cannot claim that. So you can claim that amount also. So this will be 4.7. So you can claim any expenses, but the cost of acquisition shall be known. Now what about my interest on enhanced compensation? Interest on enhanced compensation will not be taxable under the head capital gain. This will be taxable under section 56(2)(8) under the head income from other sources. So this will be specifically taxable under section 56(2)(8) under the head income from other sources. And this shall be chargeable in the previous year in which it is received, which is in this 2030. This is as per section 145. I don't know if you have done 145B as a part of your ICDS and income from business or profession, but let me show you 145B. 145B says that the interest received by an assessee on compensation or on enhanced compensation shall be deemed to be the income of the previous year in which it is received. So not in the year in which the court decides the case, but in the year in which I receive it, in that year the interest on the enhanced compensation will be claimed. Are we clear? Yes or no? Any questions so far? So 45(5) is only for the purpose of the compensation or for the enhanced compensation. Are we clear? This is taxable in the year of receipt, and even the interest on that is taxable in the year of receipt and not in the year in which the court passes the order. Now last one point over here. In terms of the compensation or enhanced compensation which is given, there is also a TDS under 194LA if the compensation is more than 2.5 lakh. So there is a TDS under section. So see, this is how you will correlate in the exam also. So TDS on compensation or enhanced compensation at the rate of 10% if compensation or enhanced compensation is greater than 2.5 lakh. 194 LBA. Under section 194 LBA, you have a TDS. So you don't have to do now this particular section separately in TDS. You have to remember here itself so that you don't forget there. Okay? Sorry, 194 LA, not LBA. Okay? And the final point before we close the session, in case, let's say for example, I want to invest in the 54 EC bonds. So from 6 months, I will consider from what dates. You have to invest within the 6 months period from the date of transfer. Now, 6 months will be considered from the date when the land was acquired or from the date when the compensation was received. So 6 months will be calculated from the date of compensation and not from the date of compulsory acquisition. Are you getting this point? So if you remember, in the case of stock in trade also, conversion of capital asset into stock in trade, there also I had told you the same thing. So if you recollect here, in the last lecture, there was a CBDT circular around that point, around the 54 EC. So yeah, see 54 EC, 6 months will not be calculated from the date when the capital asset is converted into stock in trade, because the taxability is in the year in which stock in trade is sold. Otherwise, I'll never be able to claim 54 EC. Here also, I will never be able to claim 54 EC if the 6 months are considered from the date of compulsory acquisition, because the taxability only will be in the compensation is received. So, section 54 EC, or you can write for purposes of section 54 EC, 6 months to be reckoned from date of first compensation and not from date of compulsory acquisition. Okay, otherwise you will never be able to claim 54 EC. One more important point. See, this is a compulsory acquisition of the land. What if it's a compulsory acquisition of an agricultural land? This is a compulsory acquisition of a land which is there, here it is mentioned. But what if it's a compulsory acquisition of agricultural land, students? Then will it still be taxable under 45(5)? See, first of all, rural agricultural land is not a capital asset. So therefore, if it is a compulsory acquisition of rural agricultural land, it shall not be taxable. If it is compulsory acquisition of rural agricultural land, this is not a capital asset. And if it is compulsory acquisition of urban agricultural land, this is exempt under section 1037. So you can just write this point at the start itself. So compulsory acquisition of urban agricultural land is exempt under 1037, and compulsory acquisition of rural agricultural land is not an asset itself. Last one point, ma'am, you're saying last every time, but you're not closing. Wait a second, I will close. Compulsory acquisition of land under Right to Fair Compensation Act is also exempt. So, that is exempt under that act itself. So, compulsory acquisition of land, any land, under Right to Fair Compensation Act is also exempt. So these lands, if they are acquired, rural agricultural land, urban agricultural land, or compulsory acquisition of land under Right to Fair Compensation Act is exempt. Are we clear? Now there is one more. See, I don't want to break the linkage, and that's why I'm continuing for last 2 minutes. Give me 2 minutes time. There is one Supreme Court judgment in the case of Balakrishnan. Now, in that particular case, what had happened is That was on the compulsory acquisition of land itself. And that's why I'm taking that particular decision. So in that particular case, what had happened that the land was acquired. The land was acquired, but it was not very clear whether it is compulsory acquisition or not. Because there was some amount of negotiation sort of done between the assessee and the government. So in that case, when the proceedings were initiated under the Land Acquisition Act, even if the compensation was negotiated between the taxpayer and the government, the revenue officers tried to say that no. And it was an agricultural land. It was an urban agricultural land. So the revenue officers tried to say, no, this is not compulsory acquisition of land. Because here the government is negotiating the price with the taxpayers, so this doesn't seem to be a compulsory acquisition. This seems to be a voluntary sale by the taxpayer to the government. And therefore, the exemption under 1037 will not be applicable. So under Balakrishnan case, the urban agricultural land was acquired by government. So what did the Supreme Court say? So Supreme Court in Balakrishnan held that even if the compensation was negotiated, even if the compensation seemed to be negotiated, but that does not alter the character of the acquisition. So negotiation of the compensation does not change the character of acquisition from the compulsory to voluntary. So the character of negotiation does not change from compulsory to voluntary. Are we clear? The Supreme Court held that the land was compulsory acquired, or the land was acquired under the Land Acquisition Act. And therefore, even if the compensation was agreed between the two parties, that's fine. So, the land was acquired under Land Acquisition Act. So, even if compensation was agreed between two parties, it was compulsory acquisition of urban agri land, which is exempt under section 1037. Yes, are we clear? And now I'm done with it. If you have any questions, please feel free to ask me, or otherwise you can just revise this and we will discuss from here onwards in the next class. So if you have any questions, please feel free to ask me. Okay, clear, Vignesh? Very good. Others, do you have any question? Yes, Oja.
Ma'am, what is the meaning of right to fair uh,
Right to Fair Compensation Act, right?
compensation?
Yes. So this is a particular act which is governing this, or which was, very recently published, where there is the objective of this particular act was to ensure that the land acquisition is very transparent, that the compensation is rightfully given by the government, the minimum compensation is given. So whatever lands are acquired under this Right to Fair Compensation Act, which is basically concerning where the rehabilitation is done of the people. Let's say, for example, if in the coastal areas they want to develop a project and there were some villages or some areas were living into that seashore, they want to shift that fisherman out of there. So that is done under the Right to Fair Compensation. So based on that, if any land is acquired, so that is exempt.
Okay, ma'am.
Yeah.
Thank you, ma'am.
Any other questions, students? Okay, no questions. So we'll close the session for today. Wish you a very happy Diwali and happy Dhanteras and enjoy your Diwali. And I think we have the next class on 3rd. Yes.
Happy Diwali, ma'am.
Happy
Happy Diwali,
Diwali.
ma'am. Thank you.
Thank you so much. Yes.